Four long lasting, high yielding dollar investment ideas for Nigerian investors. Welcome to Globefolio. In this video, I'm going to share practical investment ideas you can start taking advantage of right now as we continue to see the dollar surge against the naira. Now, if you look at the screen right here, this is the chart of USD to Naira in the black market. And most times, the rate in the black market, it's not significantly different from the cryptocurrency market. So right now, you see that $1 is almost at 655 Naira, meaning that for you to get $1, you need 665 Naira. That is interesting and that's not even good at all. So if you're saving 1 Naira every day, it means that at the end of the year, you have not even saved up to $1. You may probably have saved like 50% of $1, which is 50 cents. As an investor, what is the best way to approach this risk that is ahead of us? What's the best way to invest? Why do you need to invest in dollars? It's no longer an option again. It's a must that you need to start diversifying away from the naira. Besides, you need to start treating your major currency as the dollar and no longer the naira because the rate at which is increasing is alarming. As at July 2021, the average exchange rate of dollar was 440 naira. Today, dollar is almost at 650. That's over 46 to 48% increase in less than a year. Meaning that if you had invested, if you had bought $1,000 with 440,000 naira, it means that today the value of that dollar is now 642,000 naira. You can imagine almost 642 to 650 just by keeping the money in your domiciliary account. Your bank cannot pay you that return. Even if you keep that money in fixed deposit, you are not going to earn. Besides, the value of your money would have been eroded by the same percentage, coupled with the inflation figure that we are seeing right now. So today, I want to share investment ideas you can take advantage of in dollars, not naira investment, dollar investment. Because while the exchange rate is going up, you also need to find a way to preserve and protect your assets so that as it's going up, it's not going to erode the value of your money. And imagine you working for 30 days, you're working for 5 years, 6 years, and exchange rate alone is eroding the value of your currency, the value of all the wealth, the value of all the money you have accumulated over the years. So it's time you start looking at dollar investment. So here I'm starting with low risk investment you can take advantage of. Although this video focuses more on low risk and then I'm going to talk about a bit of high risk, meaning that the last ideas will be more of high risk, but I will show you how to cushion the risk factor in that particular investment. So before I share the four long-lasting, high-yielding dollar investment ideas for Nigerian investors, let's look at the risk. These are the factors that would help you. These are the factors that will make you treat these ideas as being urgent. Because if you sit back, you keep your money in naira or you save it in the bank, you are actually shortchanging yourself. So there are certain risk factors I need to mention right now that will continue to erode the value of your currency if you decide to keep that money in the bank. Now, I'm not saying that it's bad for you to have naira, but make sure at least 70% of your cash balance they are saved in dollars, especially money you do not need in the next 6 months, 12 months, 1 year, or 2 years. So if you're saving, stop saving in naira and start saving in US dollars. So let's look at the risk factors. In the last 1 year, or 2 years after the COVID lockdown, we've seen how oil price had rallied to a high of over $120 as a result of increase in demand. And then during that recovery, we saw how the Russian-Ukraine crisis also added to the increase in price of oil because of supply disruption. So you've seen how oil price is going up. How does that affect me? So let me take my time to share how each of these risk factors affects you. The first one is higher oil price. Now we know very well that Nigerians don't have the refinery to be able to convert or probably refine the crude oil that we produce. So the model here is that we sell the crude oil to buy the petrol or whatever final product that's required or probably that's expected from that crude oil. Now, when you sell, you will probably think that a higher price is good for you. But because you're also going to buy the end product, it means that your cost of import will also increase, which is where subsidy is coming in. So majority of the revenue that we're generating from higher oil price, we're actually putting that money in imports. So it means that higher oil price does not really translate to increase in revenue for Nigerian government. Just few hours ago, we just saw how that the amount we pay to service debt is now equal to what our revenue is, meaning that we almost spend all the funds, all the money generated to service our debt, which is not good. So higher oil price is not good for Nigeria until our infrastructures or until the local refineries are actually built or made ready to help us save costs on importation. So for now, higher oil price is not good. And again, what does higher oil price mean? When prices are actually going up in the market, it means the cost of refining also increases. So that's why you see marketers clamoring for increase in fuel price. We can see that's why. So if you look at the trend, you will see that most of the time Nigeria experience fuel scarcity is always the period where the price of oil is high. Why? Because these marketers are now spending more to import. And then look at the effect of this higher oil price on the global market. You see that global economy, you see that the US Fed had actually announced multiple rate hike in 2022, and we started seeing that already. And rate hike, it's not also good for us because rate hike makes the cost of borrowing expensive and also makes savings attractive. So if the CBN of an economy begins to increase interest rates, it will naturally attract investors in fixed income market because the returns they get from saving their money in that economy tends to be a lot more attractive, tends to increase. So US Fed rate hike is actually making the dollar stronger. That's why if you look at the value of dollar against most of the currencies, dollar is surging. So dollar is almost like the strongest of all right now because of this multiple rate hike. And the returns you get, the interest rates you get or interest return you get for keeping your money in US dollar banks, they're actually a lot more attractive now. So that's why funds are moving or leaving emerging market into the US market. So when US Fed increases interest rates, what happens is that funds move or leaves emerging markets into developed economy like the US. That's what is affecting us. And when funds are living like that, it's going to add pressure to our exchange rate because investors or portfolio investors are going to move money away from emerging market, and Nigeria is an emerging market. And how do they move the money? They'll sell the naira to buy the dollar and then move into developed market. Look at global supply disruption. Again, the COVID-19 that hit China a few months back also affected supply, and that also led to increase in price because when supply is disrupted and demand is constant or increasing, price tends to go up. So that's why you see inflation that we're experiencing in Nigeria, it's not just particular or specific to this country, it's global inflation. So, and that's also leading to the next part, which is rising inflation. So, a lot of central banks of different economies are responding with interest rate hike, and Nigeria is also doing that. Now, why is our CBN responding to that? Is because they want to keep attracting money. The only way you can make your country attractive to investors is to increase interest rates because if you don't do that, they are going to move away. So CBN is trying to increase interest rates just to cushion fund flows away from Nigeria to the US or other markets. Now look at the exchange rate again. Now, exchange rate has been pressured recently. Like I said before, the rate is almost at 655 to 650 to Naira. And then the question is, will the rate keep going up? Yes. I'm telling people that one thing is certain, dollar will keep rising against the naira as long as the key factors. Now, when I talk about increase in exchange rate, I'm not trying to prophesy. I'm not trying to say I'm happy when dollar gains against the naira. But the truth is that I like to look at the factors that are driving this exchange rate. One of the major factors that people are not noticing is what we call balance of trade and balance of payment deficit. Balance of trade is what you generate when you compare what you generate from exports to what you pay for imports. So if you import more, if you pay for imports more than what you generate from export, you have deficit. Now, as long as we continue to have deficit in this country, because we pay for almost everything, we import almost everything that we consume in this country, and our balance of deficit keep widening almost every year. That means we rely more on import, and when you rely more on import, it means you will need a dollar to buy this import. So if the value that you pay is more than what you earn from how much does Nigeria generate from export. Take out crude oil. You can't compare it to what we pay for import. So our deficit keeps widening. And that is the secret to this rate hike. So most people are always thinking, oh, is it CBN, is it government, and all that. We as an individual, we are not even helping matters. Everybody wants to consume foreign made products, foreign made products. You are also adding to the pressure indirectly. When they bring two products and they tell you one is made in Nigeria, another one is made in US, you will most likely want to pick the one in US because you want to feel, because you want to show off. Indirectly, you are adding. So CBN is not the only factor. CBN is not the only agency or the only regulatory body to help bring the rates down. You, as an individual, you are also a factor. Until we change our taste to local consumption, until we change our taste to patronizing locally made products, that rate will not come down. And it's going to take time because we do not even have the infrastructure alone to serve the population. That's a topic for another day entirely. Now, the last one is political uncertainties. Election is coming very soon. And one thing that most investors do, especially foreign investors, is that when we're getting close to election, they will start toning down the rate at which they are investing. They will start toning down the way they bring in money to the economy. Rather, they want to even take out what they already have just to see. Because right now, nobody knows who is going to win the election, whether it's Atiku, whether it's Obi, whether it's Tinubu. We do not know. So there's uncertainties and no risk. No sensible investors want to take business decision in a period of uncertainty. So most investments are on hold right now until 2023 election is over. So that alone is also going to add because most companies will start moving their currency away from Nigeria just to see what is going to happen. So these are the factors that is going to drive this rate higher. These are the factors that's going to contribute. So there's a lot of risk that you need to look into. So if you look at all these things, does it make sense for you to still keep your money in Naira? No, it does not make sense. Look at rising inflation. As inflation keeps surging, the value of your money is actually reducing. The nominal value may still be the same. Oh, you have 1 million naira in the bank. That 1 million is the nominal value. The real value is what it can buy. So what the 1 million could buy will no longer be the same again. That means the real value of that 1 million has been eroded. So when you are talking about money, take your mind off the value, sorry, off the figure. The figure you see on paper in your bank account is the nominal value. What you should be more interested in is the real value of that money. The real value of that money is what it can buy. So if you have 50,000 in your pocket, that 50,000 naira, excuse me, in figure is nominal value. It doesn't change. Even in the next 10 years, it's still going to be 50,000 naira. But what is changing is the real value. The real value of that money is what it can buy. Can you buy the same products that the 50,000 could buy 10 years back? No. So it means that the real value of that 50,000 has been eroded. So that's how you look at money and not the figure itself. So if the real value of your money is being eroded, it makes sense for you to start looking at the best high yielding dollar investment to put that money in so that you can protect your wealth. Because if you sit on that naira, it's just a matter of time it becomes worthless. So let's look at the best investment ideas you should be looking at as a Nigerian. The first one I want to recommend is Eurobond. Eurobond. What is Eurobond? So let me talk about them. The first one is Eurobond. Eurobond fund. First one is Eurobond fund. So Eurobond fund is like a mutual fund that you invest in. So if you have mutual funds, I'm sure mutual fund is like those companies that takes investors' money to invest in treasury bills, invest in other like treasury bill bonds and all that. So Eurobond is the fund that invests in dollar denominated asset, dollar denominated securities, dollar denominated asset and securities. That's Eurobond fund. So we have different mutual funds. There are some that are focused on equities, so we call them equities mutual fund. There are some that are fixed income mutual fund. These ones invest in bond, treasury bills. Then we have Eurobond. Eurobond are bonds that are issued in currencies other than your home currency. If Nigerian government decides to raise money today and they say, oh, we don't want to raise money in Naira, if we raise in Naira, it becomes FGM bond. But if we decide to raise the money in dollars, it becomes Eurobond. So when you hear Eurobond, it doesn't mean that the bond is in euro. It's just a name to describe a bond that is issued in a currency denominated in other currencies. That's why we call it Euro bond. Now, because Euro bond is denominated in other currency like these dollars, it makes sense for you to invest in them. Because if you look at the rate of increase, you will see that if you had invested in Euro bond last year, which was 440, when the dollar was 440 naira, and you have kept that euro bond up to this time, your money has increased. So let's assume that you invested $1,000 in euro bond when dollar was 440. That's last year June. That's 440,000 naira. Now, Eurobond pays an average of 7.5%. Right now, Eurobond is already at a high of 14.23%. But let's look at 7.5% on average. So 7.5%, that's 1.075. At the end of the first year, then 1.075 at the end of the second year. So 2020, at the end of 2020, 1.75, at the end of 2021, 1.075, and then 1.075 at the end of 2022. So it means that the value of your dollar would have increased from $1,000 to $1,242. So $1,242 multiplied by the exchange rate of 620 will give you what value? 770,000 naira compared to 440,000 that you started with. So 770,000 minus 440, that's an addition of 330,000 naira. So it means your investment has increased by 75% between 2020 and 2022 just for investing in Eurobond. Now, there's one thing you need to note in Eurobond. The value of Eurobond is not in the interest rate. Most of the gains on Eurobond, they are driven by exchange rate gain or loss. And right now, we've seen how the dollar had appreciated against the naira in the last 1 to 2 years. And if you simulate this back, you will see that the rate it keeps surging. You can see as at 2021, if you go back to the rate as at 2021 last year, you see that dollar was almost around for 400 and something naira right here, between 400 and something to 500 naira. That's the black market rate. Why I like to use black market rate is that that's the market rate, that's the rate at which we buy our dollar. So nobody goes to the bank and then gets an official rate except few companies or few individuals. So when you are looking at this rate, use the black market rate because that's the rate you are going to pay when you want to buy the dollars. Do you understand? So this is Eurobond fund. Now look at the headline on Nairametrics. Nigerian 10-year Eurobond fund spiked to 14.23% in July. What does that mean? It means that if you invest in Eurobond right now, you're going to be collecting 14.23% every year. Now, this is very impressive. But like I said, the value of Eurobond is mostly driven by exchange rate gain. Exchange rate gain. As dollar continue to increase against the naira, your euro bond is also going up. So you need to take note of that. I have a lot of people that have advised on this euro bond, and today they are happy because they followed my advice 2 to 3 years ago as regards to euro bond investment. So let's look at another type of investment you probably would have done too. Now, a lot of us are not familiar with cryptocurrencies. Some of us are always thinking cryptocurrency is all about trading. No, you could actually buy the USDT or BUSD. You can also buy USDT or BUSD. This is also another investment you can consider. This is like buying the dollars and keeping the dollars. Do you understand? The difference between Eurobond and USDT, or you could even say buy USD. So whichever one you think is fine. So you can either buy USDT, buy USD or US dollar itself. So let's start with US dollar. With the USD, it means you have to open a DOM account with your bank, and then maybe on a monthly basis, you can probably be saving in dollars. Some could have a savings plan of $100 per month. You can keep them in your bank account. Another thing you can do again is you can also buy USD stable coin. There are stable coins that are pegged against the dollar, meaning that whatever the dollar rate is, that's also the rate they are selling. So we call it Binance USD or the USDT. These are stable coin that also derives their value from the US dollar. So if you're buying the dollar, it's also the same thing as buying USD, just like this is a virtual currency. So if you're familiar with the cryptocurrency market, this is also something you can consider. So you might need to separate it from your trading account. If you trade crypto, you don't need to trade this one. You are only buying to keep. Now look at what the value of USD is saying at this point. This Binance, you can see USD is selling for $655. You can see here as at last year or 2 years ago, it was far, far lower than this. You can see what the rate is in the market right now, 655, which also coincides with the 653, 655 that you have right here. So this is also another thing you can look at. So before you invest in Eurobond, you might first need to buy USD or USDT or BUSD and keep. So when your fund has gotten to certain extent, you can then move the money to Eurobond. Some Eurobond fund managers will tell you we require a minimum of $1,000, 2,005. Islamic IBTC will ask you for over 20,000 USD. So if you don't have that amount, the best thing is to start with USDT or BUSD. Now look at the calculation we made earlier to show you how 440,000 you invested in Eurobond as a last year would have increased to over 770,000 by a 75% increase. And I want to tell you something that the major revenue, the major return of this 75% is not driven by the interest rates of 7.5 14%. No, majority of that 75% return is driven by exchange rate gain. So even if you don't have Eurobond fund, just in buying the dollar to keep alone can also help safeguard your fund. So if you had bought the dollar last year, like I told you before, and then you have kept it in your account, by now you should have increased that money by 46% in a year. So you will see that the major part of that 75,000 is 46%, which is driven by exchange rate gain or loss. So the rest of the money, which is almost 20-30%, is from interest rate. So the interest rate there is from the Eurobond investment. So if you don't have Eurobond account or you don't have the money, you don't have the capital to start investing in Eurobond, first start your savings in USD. When you have accumulated enough funds, you can then move the money to your DOM account and then invest in Eurobond fund. So the average return on Eurobond fund is 14%, just like you see here. The average return of this USDT can go above 5 to 10% or 20% per annum. You can see, like we simulated before, now we have over 40% return from exchange rate gain. And as long as these factors are still there, there's a higher chance that this particular currency will keep gaining against the our local currency. So what is the third one? The third one is to invest in dividend stocks, dividend growth stocks, the US market. Invest in dividend growth stock in the US market. Now, this is another major investment ideas you can consider. The idea of investing in US dollar, the idea of long lasting investing is something that you can stay put to for a long time. So imagine you buying into good companies that pay handsome dividend in the US market. That means every year you are collecting your dividend in US dollar. How does that sound? So dividend growth stocks, these are companies that pay you dividend in US dollar, meaning that for being a shareholder of that company, you are entitled to dividend from that company on an annual basis. Some companies even pay quarterly dividend, some pay dividend every 6 months, while some pay per annum. If you are collecting dividend from US, companies, it's never the same as that of Nigerian company. If a US company is paying you dividend of $100 per annum, for instance, last year that would have been 44,000 naira. This year, that same $100 would have been 600 or 600 62,000 naira. Sorry for that. 62,000. So you can see how your dividend would have increased from 44,000 to 62,000 just because exchange rate. Because the overall idea of this high yielding dollar investment is to be able to build portfolio that will continue to gain as long as exchange rate keeps increasing. So if you're collecting handsome dividends from the US market, by the time you convert it to naira, you might have earned a lot more year on year. So dividend growth stock is one of the best investments you can also consider. How does that work? You're looking for companies that have stable revenue, stable they're generating profit, and also has stable cash flow. These are the kind of companies you want to invest in so that at the end of the year you're collecting your dividend. So there are so many of them out there in the market. In other videos, I'm going to share some of the best dividend growth stocks you can look at. In my community, I've already shared interesting dividend growth stocks. Imagine buying into a dividend growth stock that pays you an average of 19 to 20% return on your investment per annum. That's after withholding tax. That's very interesting. Imagine buying into those kind of companies. So those are the dividend growth stocks you might need to consider. So some of them pays quarterly dividend, some of them pay annual dividend. Now, 19% in US dollar is not the same as 19% in naira. You can't compare both of them. If a company is paying you 19% of 1,000 naira, it's not the same thing as 19% of $1,000. So that 19% in dollars is far better than the one in Nigeria. So you need to take note of that. So that is dividend growth stocks. Then the fourth one to look at, this one is high risk, but you must learn it. It requires you to have a mentor. It requires you to sit down and then understand the risk behind it. But the only thing is that your capital allocation in this one has to be very minimal. So if you're going to be allocating capital in all these ones, I would probably say Eurobond can have like let's say 30%. Then this can have like 30%. This can have like 20%, 60, this is 60, this is 30%. And then the last one is what we call you must learn how to trading US assets. And trade financial assets like stocks, so or FX. Some can have like 10%. So when it comes to capital allocation, you can, sorry, let me try to create space right here and bring this down. So we have the first one, two, three, four. So 1, 2, 3, 4. So you have Eurobond, 30% of your money can go to Eurobond, 30% can go to this, 30% can go to this, and then trading of financial assets. Now the 10%. Now this last one is highly risky, but if you understand the method, if you understand the strategy, all it requires you to do is to have a trading strategy where you're able to buy low and sell high. That's the trading strategy in this market. Like as at the time I'm doing this video recording, I just closed one important trade on this particular asset right here, which is APACA, this particular asset here. So I bought at this point and then I sold right here. Then I keyed into this other asset, this particular one. You can see here, I bought right here, and then I have a target to sell at this point for just 10% return. So I have my risk at this point, and then my risk can be 1 to 3, 1 to 4. So when I buy this asset, I'm looking at selling at this point here. So that's the trading. And between this point to this point, we have close to 10 to 13% return. and I can get that in 2 to 3 days. Although the opportunities might not come every day, but I could get opportunity like two to one to twice in a week. So one to twice in a week, and I'm getting 13% is also very good. Sometimes I lose, but the only thing is that my winning ratio on this particular trading strategy is almost 60 to 70%. Sometimes there are times in a week where I will get close to 80% winning rate. So that's the fourth one, which is trading financial asset. You can also trade stocks too. You can trade stocks. So there are some energy stocks that you can trade. So this particular one requires you to understand the trading strategy that I'm adopting. So how do you can see right here, you buy assets here, you sell at this point. You buy here, you sell here. You buy right here, you sell at this point. You buy here, you sell at this point. So the target is to go for 10 to 15% return per trade. So that is trading financial assets. So this last one might be optional. It might be for professionals or people who are good. And then if you have a mentor who can teach you how to trade stocks, how to trade cryptocurrencies or FX, those ones can also help you to grow your funds in US dollar. But if you're a low risk person, you don't want that time, you don't have the time to monitor your financial, you monitor your stocks, monitor your cryptos, or to stay glued to your system, you can go for the first three: Eurobond, USDT, and dividend stocks. These three are the best high yielding dollar investment you can actually adopt right now to grow your portfolio. So whenever dollar appreciate against the naira, you are smiling because you know you have some of your assets in that particular currency. So these are my four long-lasting, high-yielding dollar investment ideas for Nigeria. If you think there are also other investments to consider, please kindly share your comments. Let's learn, let's understand other investment opportunities that are available for us in Nigeria. But I do not want to look at high risk. I want to look at investment that you might probably not be too exposed to. So that's why I had to take my time to study the few ones that I know anybody can do, even a beginner, even a novice can take advantage of to start growing their assets in USD. So if this is the first time you're watching this video, kindly hit the subscription button, turn on the notification bell so that when I release new videos, you will be updated on on the new videos that I'm putting up on this particular channel. So I want to say a very big thank you to my 1,000 subscribers. You guys are good, and I can assure you, I can tell you with confidence that the next video I'm going to be sharing with you is going to be mind-blowing video on how to trade the financial assets, even in a bear market.